Also, actually, can you turn off the video too when it's not your turn to speak? Yeah.
Okay, attendees are coming in. Very nice. Welcome, everybody. We will just give more people a chance to come in, so we'll wait a few minutes. And yeah, I think a few more minutes, and then we'll start. So just have a little bit of patience, please. All right, I think a lot of people have come in, so I think we'll start slowly with an introduction to today's speakers and program. So I would like to welcome everybody to our monthly community call and webinar. My name is Mette and I am your host for today. And today we are covering the topic of real estate tokenization and stablecoins. And we have a fantastic list of speakers joining us. The program today is as follows. First, we have Klaus Skåning. He is the CEO of DigiShares, and he will give an update on the tokenization industry in general and on DigiShares traction. This is followed by Mark Denker, also of DigiShares, VP of Blockchain Development, who will talk about stablecoins and their importance. We then have a presentation from Arne Gudjonsson. He is the lead software engineer at Monerium, followed by Andrew Bellingham, sales manager at Coinify, talking about how stablecoins lower the barrier to entry. After that, we have our first case study of the day. It will be presented by Solo Makara, CEO of AfriX, talking about AfriX's Africa strategy and how tokenizations and stablecoins will accelerate that strategy. Our second case study is presented by Mark Robinson of YChain. Then we will end the day with a fireside chat and AMA. And you will get a chance to talk to everybody of the speakers who have joined us here today. As you may have seen, there is an open chat down in the corner. And when the speakers are presenting, anybody may feel free to use that to ask questions. And we will evaluate after the end of the presentation if there is time for those questions there. And if there is not, then we also have the fireside chat at the end. And that's your chance to get your unanswered questions answered. So So, and everybody, please confirm down in the chat that you are hearing me clearly and that you are seeing the screen. And Klaus, I think you can get ready. Klaus, are you there?
Yes, I am.
Very nice. Please take the stage, Klaus.
Thank you. I'll just stay here if that's okay. So my name is Klaus. I'm the CEO and one of the co-founders of DigiShares. I've been helping to start up this company and grow it for the last 3 years. I have a background as a researcher and actually in AI, but I left AI many years ago and went into blockchain. I think it's a much more exciting space to be in. DigiShares is a company that we created 3 years ago with the goal of basically creating a gateway into tokenization and into the blockchain ecosystem for real estate developers and asset managers. So today we have a platform that is basically a combination of a crowdfunding platform, an asset management platform, and also a trading platform. And we are a part of the ecosystem globally and can link and integrate to many other parties, including custodians, regulated exchanges, payment providers, and so on, and potentially in the future also the DeFi ecosystem. So we are hosting these webinars and having a different topic every month. The next time we are focused on, let me see, Ravencoin, where we are doing a project right now. Most of the projects we do are on Ethereum, but we see interest also from other blockchains in doing tokenization. And actually we have Ravencoin we're working on now, but we have a couple of other ones coming up in the future. The one after that will be focused on decentralized trading and how that can be done with security tokens, tokenized securities. And then we'll be looking at DeFi lending and other topics along the way. And every time we will try to present interesting speakers and give our own sort of view on our own take on this particular topic in relation to tokenization. But today we're speaking about stablecoins and how important they are for what we are doing in this space. Stablecoins are, you could say, underpinning the most of real blockchain applications because it gives us a way to easily on-ramp users into our space. And today we have some really good speakers from the space who we are integrating with and working with in order to make it easier for non-crypto investors to participate in tokenization and invest into the projects of our clients. Just a bit more about what DigiShares is working on. So we went to the Blockchain Expo in London last week and gave a presentation for this 2-day event. It was a very nice event with a lot of interest for what we are doing and for tokenization in general. We had almost a line in front of our stand, so it's clear that there is a huge interest in the space at this moment. We also going to a couple of other events over the next few months. So next week we have the Tech Barbecue event in Denmark where we have a stand. We also have Money 2020 in Amsterdam next week where Bjørn Holte, our VP of Business Development, will be present if you want to meet him. We are going to the Blockchain Expo also in Amsterdam in November with a stand. And generally we are present at many events. Today we sent out a press release on a project that we're doing with MarketSpace in Texas in the US, tokenizing initially a $6.5 million multifamily apartment in collaboration with T0. So we will be responsible for actually tokenizing the property and maintaining the share cap table and the high level sort of asset management of the property. And the property will be listed and traded on T0. So it's an exciting collaboration project showing what the different parties in the blockchain or tokenization ecosystem can do when they work together. We keep signing up many interesting clients. In August, we signed up 4 new real estate clients, including, I think, what is probably the first project out of India, probably also the first project out of Turkey, and then a US project and a South American project. So it's extremely international what we are seeing here, and we speak to early adopters and pioneers in many different countries, who are sort of paving the way for others to follow, and finding solutions to work with in their local regulatory framework, working with regulators and local legal partners. Along that vein, we are also pretty soon sending out an industry report on the regulation around tokenization in the European Union within the next couple of weeks. I myself, I'm going to London on the 5th and 6th of October. If anyone wants to meet up, if you are in the neighborhood, I'm happy to meet. And that's basically it for me. So Mette, I don't know if we are taking questions now or we are waiting with that.
Hello, everybody. I don't see many questions, so I think we'll just move on to the next speaker, and that's good because then there's time for more questions for him.
Yeah, that's
so,
good.
Mark Denker, are you ready? Thank you, Klaus.
I am more than ready. Should I
Great.
just kick off or?
Kick off and share your screen.
Fantastic. So good afternoon and good morning, everyone, wherever you're logging in from. Today, we are talking about stablecoins and tokenization. Are you guys able to see my screen? I should come up with some slides here. How do I confirm that actually, now that I asked the question? People are saying yes. Perfect. Great. So this is obviously a DigiShares / real estate exchange presentation. So I will be weaving in some of the DigiShares agendas. Just a fair warning on that. But treat this as sort of an introduction to stablecoins and tokenization. Some of you might be experts in that, and you can sit back and relax. Maybe I'll tell something that you didn't know. And for those of you who are just learning about this, feel free to reach out if there's anything that you are missing. Come back to us if there's any questions. So, a brief introduction. Can I minimize this? Remove all this stuff. Maybe this is fine. So, taking it from the top, stablecoins are basically a type of cryptocurrency that is pegged to what is quote unquote real world assets. Typically, we consider stablecoins as US dollar tokens or US dollar pegged tokens, but there are all kinds of stablecoins out there. There are gold pegged coins, which you will see in a minute. Basically, anything that is pegged to real world assets and can be used as a medium of exchange. Most stablecoins are issued on Ethereum, but you are starting to see a lot of other first layer blockchains implementing stablecoins on their blockchains. One notable example is Algorand, that is very much building out very, very sophisticated financial infrastructure. And that you will see that also with USDC, one of the largest US dollar pegged stablecoins launching on Algorand. Right now, stablecoins are being issued predominantly by private entities. For example, the Center Consortium that issues USDC. They are very close to Circle and Coinbase that some of you might be familiar with. But these days, there are a lot of public entities, central banks, that are flirting with the idea to issue fiat currency on the blockchain, which is commonly referred to as CBDCs, central bank digital currencies. You might be asking yourself, how big is this space really? Is it a nascent, up-and-coming thing, or is it actually a vibrant, growing community, if you will? And looking at the numbers, the most recent number that I could find is that $113 billion worth of US dollars is being issued on the blockchain. And this is only including US dollar stablecoins. This is not including gold and whatnot out there. And just looking at the graph real quick from Missouri, one of the most I would say, respected analytical firms within this space. They have this graph dating up to February 2021. So this is already outdated, half a year old, if not more. But you can already start seeing the trend. Stablecoins, again, this is only focusing on US dollar pegged stablecoins. And the graph is basically going parabolic. So this is definitely a space that is growing and growing fast, and very much speaking to the whole tokenization, tokenizing everything, putting everything on the blockchain. So yeah, if you look at other types of stable coins, if you look at gold-backed coins, for example, like PAXG, you will see similar trends in the numbers. Some of you might be thinking, why do we distinguish between private and public stablecoins? Why is there only private stablecoins out there? Well, that's kind of how the world works. And if you don't think about money much, then you might not know this. But actually, in developed economies, in the Western world particularly, up to 95% of all money is private. When I think about money in many ways, I think of Daniel, my dear friend from elementary school, who grew up in a divorced family. And, you know, Daniel is like money. You know, you have two parents fighting to claim authority of him. And public money and private money is very much doing the same thing as Daniel has gone through his own life. With central banks and public entities always saying we are the ones issuing money and we are the ones who controls money supply. But in reality, especially in the Western world, you see that private money is predominantly being maybe not controlled, but at least issued by commercial banks in particular as deposits or claims against these commercial banks. So it's not a new concept that all these different foundations and organizations are issuing stablecoins as a private entity. You have Tether, you have Circle, Coinbase, you have all these different private entities issuing stablecoins. So it's not a new concept. This is what has been happening for a long time. But what we see now, and this is an interesting development that many of you probably follow, is that the governments like the Chinese government is seriously experimenting and launching in beta mode, for example, the digital yuan. But still to this date, no country, to my knowledge at least, has fully adopted a government issued stablecoin yet. Because if you ask experts, this is only a matter of time, not if, but only when. Let me just check if there's anyone. Oh, sorry, I'm just checking the comments here before I move on. What happened? So a few examples that you might be familiar with, some of you already. I mentioned a few of them on the dollar-pegged stablecoins, USDC, USDT, PAX, which will soon be renamed to USDP. There's a lot of these dollar-pegged stablecoins. I mentioned gold-pegged stablecoins. PAXG is arguably the biggest. You can check that on CoinMarketCap or whatnot. Tether also has a gold coin called Tether Gold. And then question mark. Question is, will there soon be real estate pegged coins out there that you can actually use as a medium of exchange? You might ask yourself, why would you need that? Well, in the past, there were actually people trading and transacting using real estate as the medium of exchange. Maybe we'll see a renaissance in that. Who knows? So why are stablecoins important? Well, in many ways, the future of money is going to be decided by stablecoins. This is very familiar, feels very safe to most people, especially first-time users of crypto and exposure of blockchain. But the future of stablecoins are quite fuzzy. For example, will stablecoins continue to be issued by private entities like it has in the past? Will government-issued public stablecoins demolish the need for privately issued stablecoins. If we look at the current situation in fiat currencies, where private money is still very much alive, as we mentioned earlier, 95% is issued by private banks, commercial banks in particular. So if we take that as an example, then probably privately issued stablecoins will still be around a long time in the future, even though governments will start issuing their own stablecoin. And then, of course, there's the elephant in the room. Will governments start regulating heavily these stablecoins? You already start seeing that happening. You had the BIS, which is like the central banks of central banks, sort of arguing to central banks around the world that they should get their act together before privately issued stablecoins become too big. So there's definitely a lot of debate going on within the world of central banks around this. But regardless of what happens with stablecoins in the future, they already play a very, very important role in particular two things. One is on-ramps and off-ramps, which I'm sure Andrew later from Coinify will probably also talk about. Basically, on-ramps and off-ramps are how people get in and out of crypto between fiat and crypto. And obviously, if you hold a lot of dollar deposits, moving that from US dollars in your local bank to dollar pegged stablecoins like USDC or USDT, that is probably the easiest, at least conceptually, to understand how you could get into the blockchain space and all the features that it provides. Another big role that stablecoins play is around tokenization. I think that's an obvious one. If you can tokenize fiat currency, what's stopping you from tokenizing all kinds of commodities, gold, corn, orange juice, you name it? And of course, real estate, as we are focusing on here in DigiShares. Just touching briefly, I won't go into all the details on on-ramps and off-ramps. For any of you who wants to know more, Andrew is probably your guy who is coming on later, or of course, ask us directly. But the entering and exiting crypto has historically been quite tedious. It's becoming more and more fast, more and more cheap, and more available for the unbanked. That's really the big promise of crypto in general, I would say, but I think stablecoins is the most obvious solution to all this, making fast transactions instead of going through the SWIFT protocol. You can go through the blockchain. You still, for many people and institutions, you can't accept the high volatility in other cryptos. So stablecoins is an excellent way of transacting on the blockchain. Trading, obviously, if you are a trader, you normally have your cost and your bills being paid in some shape or form in fiat. So your safe haven quickly becomes the US dollar stablecoins or whatnot. I would obviously argue, being a crypto fanatic, that fiat is nothing like a safe haven, but that's how most traders would treat it. And then, of course, transacting everyday coffee purchases or whatever you buy, stablecoins is the #1 contender, I would say, to be able to do that on a daily basis. Instead of using fiat currency with your Visa and MasterCard, you can use a similar card, but now transacting on the blockchain in stablecoins. And then I have ruthlessly been stealing from my colleagues here at DigiShares, talking about the tokenization market. The World Economic Forum estimates that 10% of global GDP will be on the blockchain by 2027. For those of you who keep tracks on the latest and greatest projections of global GDP in 2027, that will be estimated to $125 trillion. So 10% of that will be $12.5 trillion. Right now, I believe the market cap of all cryptos combined is around 2 trillion. So that's what is that? 6 times the current market cap that the World Economic Forum estimates, blockchain or the crypto space in 2027. So in general, people are estimating and projecting that more and more assets will be recorded on the blockchain. You can sort of foresee the steps with the current cryptocurrency market being established right now. These are outdated figures, of course, slowly but surely tokenizing stocks, then the entire markets, then real estate, and then finally derivatives. There are already smart people working on all these, in particular people at DigiShares on the whole tokenization of shares, real estate. But one thing is for sure, smart people all around is projecting that this is happening and is happening soon. And the reason for tokenization is pretty clear. It's very much the same as on-ramps and off-ramps. There's efficiency around time and costs. You can all of a sudden do new things with increased liquidity. When we talk about real estate, for example, instead of having a very illiquid asset sitting there in a building, you can suddenly fractionalize ownership of that building and sell it in the open market, making your real estate investment incredibly liquid compared to before. So there's a lot of upsides and benefits of doing this, and that's obviously why people start doing it. And it wouldn't be a DigiShares presentation without finishing off with a little bit of shine on what DigiShares is doing, which is exactly tokenizing securities and including securities that has real estate as the underlying asset in the security. And very much what is being the focus here is issuance. You need to be able to comply with the regulation. You need to be able to register investors. You know who they are, doing KYC and AML. There's multiple features around corporate management, and then of course trading. So again, if you have more questions on this is just a quick overview. Feel free to reach out to us. But I think I'm already past my time, so I will leave you with that and say thank you for listening.
Right. Hi, Mark. You are not past your time, so there are a few questions down in the chat.
Super.
So the first question is from Brad. He says, how receptive are government regulators, let's say the SEC, towards stablecoins?
Yeah, so how receptive in the terms of if I was to set up a stablecoin myself, issue a stablecoin, is what I imagine. Is that the question you think, or?
I think, or the use of stablecoins? Perhaps you can touch on both.
Yeah, so I haven't set up a stablecoin myself, so I don't know exactly. But given the fact that there are a lot of stablecoins out there, the graph that I'm trying to find here, let's take this, sort of underlines the fact that it can be done, right? An interesting stablecoin, if you ask me, is DAI. It's not only interesting because it was created here in Denmark, in our backyard, but it's also interesting because it is fully decentralized. Most of these stablecoins, what happens is you pay, let's say, $100 to your local bank account. If you're sitting in the US, you would transfer $100 to the guys behind USDC, and then they will issue 100 USDC. So that means that these foundations behind the stablecoins, they will basically hold a lot of cash deposits. There's been a lot of media discussion around how much these foundations hold as cash deposits or equivalents, bonds, etc. But obviously doing that, you need to be crystal clear in the local regulation that is happening wherever you are setting up this foundation and planning to issue these stable coins. Because some regulators in the US and even on a state base in New York, for example, a lot of these stablecoins are being issued. PAX and I believe also USDC is being issued from New York. They have local regulation, and if you're setting up a foundation in Switzerland, it will be a different regulation. But I'm not sure that was exactly the question, actually. Mette, can you help me out here? did I cover that question, or is there anything else to it?
Well, I think we should just say that the thread, if you did not feel that it was answered, please clarify in the chat. And we'll move on to the next questions because there are more incoming. What is the risk that the US government treats stablecoins as a security as opposed to a coin?
Yeah, great question. And that's actually a very real risk right now. I believe it was USDC that's being sued because they were holding too much bonds in their portfolio. So basically, they would be getting a lot of cash deposits. Some of them they would reinvest into government bonds, probably to earn a yield, I would assume. And the SEC treats government bonds, US treasuries, as a security, and hence USDC would be treated as a security. So that was sort of a trickle snowball effect that the guys running or issuing USDC didn't foresee. So what happened, to my understanding, is that they sold basically a lot of the bonds that they were holding and converted into cash deposit. So the USDC would not be treated as a security. But this is certainly a risk, and I don't know where the silver lining is. You know, if it's 5% bonds of the cash deposits, or if it's 1%. I mean, for that you have to be a legal expert, I'm sure. But it is a risk.
Yeah. One more. Which stablecoins are commonly being used by DigiShares clients? Do we know?
I'm actually not sure about that, but I think it's Tether or USDC, the biggest ones.
Okay. Next one. What are the main challenges that you foresee faced for the tokenization of physical assets? How do traditional players like real estate agents, regulators, policymakers respond to this radical new idea of tokenized assets?
Yeah, I think the main challenge is legal will be too broad an answer, but it's in particular the KYC and AML regulation, like knowing who owns what. Crypto in the past has been very much the Wild West, and to some extent it still is. But we need to get our act together in terms of identifying people and doing proper AML, so we know that assets on the blockchain is not being used to sell drugs or whatnot, terrorism acts. So yeah, KYC and AML, I think, has to be sorted out in order for this to really explode. I mean, government issued stablecoins, personally, I'm not a big fan because it becomes borderline George Orwell's surveillance society, because all of a sudden governments could be able to see everything and what you purchased at any time. So personally, I'm not a big fan of that. So there has to be a middle ground. The way I see it and the way that the discussion is going right now is either we have government issued stablecoins where everything is out in the open and you can see, like, a government could see all your purchases, or the other extreme where nobody identifies themselves and nobody knows who owns what stablecoin. I think there is a middle path there that and KYC and AML is the silver lining that we need to find a solution to. Yeah. Okay.
Yeah, good answer. There are actually several more questions, but we have to stop here and welcome the next speaker. Everybody who has not had your question answered, please join us for the Fireside chat at the end of the day. Thank you very much, Mark Denker.
Thank you.
And now we are welcoming Arnie Gudjonsson, lead software engineer of Monerium. Arnie, are you there?
Yeah, can you hear me okay?
I can hear you. Can you share your screen?
Yeah. You can do that.
Great, well, please take the stage.
Great. All right, can you see my screen?
Yes.
All right. Yeah, I mean, that was really interesting hearing what Mark was saying, and I can definitely shine some light, at least what we've gone through at Monerium. So we are kind of making money smarter. We are regulated and we are issuing actually real money on blockchains. So I can kind of go through that a little bit later. So I'm Arne Gudjonsen. I'm head of product development and partnerships at Monerium EMI. And Monerium EMI is a electronic money institution. So we're a financial institution that is regulated in Europe and licensed to operate in the European Economic Area and the United Kingdom. Our license, the e-money license, has been kind of recognized by governments and regulators for more than 20 years now in Europe. And e-money license, basically e-money is very safe, secure and safe. It's more than one-to-one backed in kind of high quality liquid assets, and it's unconditionally redeemable on demand by whoever holds the e-money. So actually e-money is safer than bank deposits. But at Monerium, so what we're doing as an EMI, we're bridging the banking world with blockchains. We have developed technology that allows you to send money actually directly between banks and blockchains. And also that we have money on the blockchain that where you can enjoy the kind of the full promise of blockchains. I was thinking I should probably, how do I explain kind of what problems we're solving and kind of what is blockchain? I'm not going to go into extreme detail what blockchain is, but I'm going to kind of introduce the kind of components that you need to know and kind of how they interact and who does what and where does Monerium fit in that picture, and even where DigiShares fit in the picture. So I kind of like to think that, why is blockchain important, and like, what is our mission there? What can you do there? And what we think is blockchain basically is where everything of value, kind of like what Mark was saying earlier, where everything of value can be stored or tokenized. It can be sent anywhere, exchanged for anything, at any time, instantly, and without intermediaries. And I can kind of explain what I mean by that with an example, right? So let's take the example where DigiShares, we have an issuer and you have investors. And DigiShares and these kind of platforms that are tokenizing securities and assets and representing them on the blockchain are doing a really good job just simplifying the whole process, where the issuer can actually just use a smart contract that is controlled or kind of deployed by the platform, the DigiShares platform, and represent these shares or tokenize these shares on a blockchain like Ethereum. Once it's on the blockchain, it's kind of controlled by a smart contract, which is a self-governing computer program that lives on the blockchain. And this smart contract knows exactly how many shares there is, what's the price of the share, let's say it's in euros, and who can buy these shares. So you can now even kind of embed these kind of KYC, AML rules into these contracts to say, okay, can anybody come and buy these shares, or do you need to kind of been able to have been proved by the issuer to actually buy these shares? So the investors, let's say one of the investors is a crypto investor. They do not want to, have fiat. They're kind of probably like Mark, more like they prefer the crypto rather than the fiat. And they might have something like Ether, which is the native coin or currency of Ethereum. So how would you know? How does the contract that has the shares know how much shares it should sell this investor when it's paying in, not in, let's say, if the shares know euros and then the crypto investor wants to pay in Ether, how does it actually know how to kind of what the price is? And this is one of the beauties of blockchains. You have other smart contracts that can help out there. Let's say a DEX or a decentralized exchange, something like Uniswap. You can get the price from these smart contracts, or you can actually get it off chain also. But there's capable the smart contract that has the shares is capable of getting this kind of price feed into them and actually noting, okay, so if you pay in Ether, then that is this much euros, and it can do the exchange instantly. and the crypto investor, let's say, buys 10% of the shares and actually does it in Ether, and the issuer get paid in crypto. Let's say the next investor is more kind of interested in stable coins, what Mark was talking about. So stable coins is crypto, but it has a value that you recognize. You know, it's $1, and you know how much dollar milk costs or whatever. And then you can also, you know, it's probably easier than to calculate, okay, so how much stablecoin does the share cost? So in this example, the stablecoin is DAI. This could be USDC also or whatever. But basically, one DAI is roughly $1 or $1. And in the same way, the shares smart contract can check on Uniswap or this decentralized exchange, know what, you know, can convert it into euros, calculate the price and say, okay, you can buy, let's say they buy 40% of the shares. And now the issuer has DAI stablecoin, and the investor has 40% of the shares. Let's say that. But let's take the third investor, and they're not maybe blockchain savvy, or maybe because of regulations, they do not want to hold crypto. They want to deal with money, like a euro, and not in stable coins or in crypto. So what can you actually do there? The money is outside of the blockchain. It's in a bank somewhere. How can they actually do this without, you know, if they go through centralized crypto exchange, buy crypto, then they're holding crypto. But so this is kind of what Monerium is solving. We've created the world's first blockchain bank account numbers, an IBAN, a Monerium IBAN, which is an international bank account number that is connected on the blockchain to your blockchain address. And this IBAN is in your name. So the issuer owns this IBAN. And if they will send money via this IBAN, the receiver will see that the money came from the issuer. And Monerium is the first company to get a e-money license to actually issue money on blockchains. And it took many, you know, 2 or 3 years for us to kind of educate and work with the FSA in Iceland, with the regulators. And it was a really good kind of relationship, and we kind of managed to work with them, and together we understood that, you know, this is e-money that we are issuing to the blockchain, and it's the same euro as the government euro, you know, your bank euro, whatever. It's only smarter. So what the investor can do, it can just, you know, transfer euros via the SEPA banking system to this bank account number. Monerium will automatically detect the payment and safeguard the funds, and then issue the same amount to the blockchain for the issuer. And now the issuer has on the blockchain euros in their wallet. So there's a difference between the e-money that we issued and the stablecoin, where the stablecoin acts like money and the euros that we issue is actual money. And the cool thing also is that what we built here is that these bank account numbers you can connect them on chain also, that, you know, the smart contracts can interact with the payment information that we receive, and it can actually then say, okay, the smart contract knows that the payment has been received, you have euros on the wallet, and they can actually issue 50% of the shares. Let's say that the, you know, 50% of the investors want to deal with money, and the 50% of shares goes to this investor, right? So now we have a scenario where the investors has bought these shares, they own their percentages, and it's amazing also on blockchain that, you know, they can trade these real estate tokens between themselves or with somebody else, and the blockchain always knows who owns what in the real estate, and you can do a lot of cool things there. But now the issuer, let's say the issuer, you know, needs to pay bills or salary or whatever, or fund their project to, you know, to be able to kind of start paying interest. What can they do with, you know, the cryptocurrency, the stablecoin, and the euro that is on chain? And the cool thing is that these decentralized exchanges that I was talking about, like Uniswap or whatever, they can convert the crypto for the euros programmatically, or just directly with these platforms, these smart contracts, and get euros. And then they can use their IBAN to just transfer the euros in one transaction into their bank account. And now the money lives in their bank account, and they can do whatever they want, on the bank account side. So that's kind of how we, the problems that we're solving. But let's say if we take it even further, now a little bit later, the project is funded, getting interest, or we want to pay interest to the investors that actually hold these real estate tokens. And the cool thing is that you could have a separate smart contract for that, which just handles this. So the issuer or anybody can pay the euros into a smart contract that says, all right, this is the interest, it can be paid out, and it could automatically be pushed in real time to the investors, or the investors can collect their interest by proving, because the investor can show the smart contract, I own 10% of this real estate, I want to get this interest, and they will automatically get paid by the smart contract without any intermediaries. And this can happen monthly, yearly, or in real time. You can actually stream money to the investors in real time on chain, which you could never do in the banking world. And the investors will get paid in euros, let's say that. And the crypto investor can convert their euros into Ether. The stablecoin investor can convert it into DAI, and the money investor can get its own Monerium IBAN or blockchain bank account number and transfer their euros directly from the blockchain into their bank account. So that's kind of our mission, what we're doing with money, making it smarter in blockchains where everything of value can be stored, sent anywhere, exchanged for anything at any time, instantly and without intermediaries. Yeah. So just the status update here is the euro is live on Ethereum, and we are actually hiring. We're growing really fast right now. We've created a sandbox environment where you can try this out in a test environment with kind of fake money, so you can kind of understand it and kind of get a feel of it. We also have a API where platforms such as DigiShares can actually integrate either to an API or our smart contracts, and we also have an application out right now. And you can learn all about it on monerium.com, or we also have a page dedicated for developers with kind of documentation, API specifications on monerium.dev. And we're going to be announcing a lot of really cool and exciting things on Twitter at Monerium. I think I'm done.
All right. Let me just jump back in here. So we have one question from Serge. Let's see. How do you do property transfers?
Sorry, how do I?
The question is, how do you do property transfers?
Property transfers.
Serge, perhaps you can clarify your question.
I think it's not a question for Arnie. It's more a general question for the fire chat, right?
Yeah. So anyway, in regards to kind of how do you do transfers on chain, I mean, you have a blockchain wallet, and everybody's making this thing a lot easier and simpler for everything. I mean, it looks really complicated, but basically what you're just dealing with is the good old internet. And the only thing that is kind of new in the mix is a wallet, a blockchain wallet. And your wallet could be your wallet that you hold the keys, or you have DigiShares. I think, like Klaus, you also have partners like Tankini and these with these kind of custodial wallets where they've made it super simple for anybody. They do not need to know anything about private keys or and these kind of things. So and then it's basically these wallets that transfer these assets on chains. how we do the transfers of money to and from blockchain is you can either go and use our application and just log on and you say, okay, you will see your balance there and you can say, okay, I want to send 100 euros to this bank account, and it will be automatically taken from the blockchain and sent to this bank account. And the same thing, you have this bank account number, you can give it to anybody. If they transfer money to this bank account number, your Monerium IBAN, it would automatically detect that and issue that money. We know where your wallet is, your address, and it will automatically, appear in your blockchain wallet. I don't know if that answered the question.
Yeah, Serge is clarifying down in the chat. He's saying he didn't mean the money, he meant the property title. So,
yeah, I guess that's more for class later. Yeah, definitely. For the
Okay, so we'll take that up in the Fireside chat later, and others can join in. Are there any more questions for Arne? Please put them in now before we move on.
Yeah, so just want to kind of reiterate on this, kind of what Mark was saying there, is that, we've already kind of worked with regulators. So this is definitely is happening, that we're trying to kind of, in coordination with them, we're trying to figure out a framework where, you can still keep the decentralized finance aspect of it, where the money on chain is without intermediaries, you can send your money anywhere. And we do KYC on everybody that, our customers that want to get the Monerium IBAN and send money to and from banks. And it was, it took time to actually get to that point. But I think, but this is, when you're dealing with money and securities, I think, yeah, there's a balance there, and you need to have regulators in the mix. And if we're going to go for mainstream, you need to have money, not something that kind of looks like money.
Okay, very nice. There was one more question now. It is, how was the process of getting approval from the regulators? Also, if this is a global protocol, what do you think about regulatory approval from other countries?
No, exactly. I mean, this was not easy for us at all. It took like 2 years of kind of telling them kind of, okay, so, what the blockchain is and what a wallet is. And, when we were talking to them 2 or 3 years ago, there wasn't a Uniswap or anything. And basically the main questions that we got was like, why would you want money there? And I said, it's because of, these smart contracts, and there's something going to be built there. We don't know exactly what it's going to be, but it's going to be amazing. And it happened. But the, working with the regulators in Iceland was actually quite nice. They were really kind of progressive. They really had an open mind. We, went through all of the risks, and yeah, so it took 2 years. We got the license, and we just, we regulated, and we have a good communication with them.
Very nice. Okay, well, that was it. Thank you, Arne, for your lovely presentation. And I'll see you later in the Fireside chat, right? Yes. Great. We'll move on now to Andrew Bellingham from Coinify. Andrew, are you there?
I'm here. Can everyone hear me okay and see me all right?
I can hear you at least.
Very good. Okey-doke.
Fantastic. Please take the stage.
Excellent. Well, first of all, big thank you for having me on, everyone. My name is Andrew Bellingham. I'm the sales manager here at Coinify, based here in Copenhagen, Denmark. And in this short session, I've been challenged to provide some insight into stablecoins for you all. And I have been told that there are some of you in the audience with a good grasp of the digital asset landscape, whereas others are quite new to the space. So hopefully by the end of the presentation, you will all know a little bit more about the benefits of stablecoins, particularly how and why they're used to lower the barrier to entry for those looking to participate in the world of digital assets. So I want to briefly first go through how we even got to stablecoins in the first place. Right, first we had Bitcoin, a digital currency built on distributed ledger technology, And this was absolutely revolutionary for the following reasons, right? Allowed individuals to avoid banking and transaction fees when sending funds internationally. It also ensured significantly faster transaction times. And then Bitcoin also allowed the unbanked to participate in the electronic payments economy. And then lastly, due to its decentralized nature, it did insulate users and people from the failures of centralized authorities, which ensured secure access to their funds without the involvement of an intermediary or a middleman. Now, the technology behind Bitcoin, right, blockchain technology, showed us how we can establish a token of value. So what we began to see sort of pop up was tokenized versions of assets. So companies could create a digital unit of ownership, such as, you know, an asset of real estate or venture capital funds, precious metal, art, etc. The list goes on. Essentially what DigiShares can provide, right? So you can take a typically highly illiquid asset, such as real estate, you can tokenize it, right? Create that digital ownership of, or a digital unit of ownership. And then these tokens can then be bought, sold, traded on the secondary markets 24/7 as well, with extremely low transaction costs. It allowed them to be fractionalized, so you can own a portion of real estate depending on the number of tokens you have. And then this can then democratize the way the real estate market sort of works by providing a broader access to those who might have been priced out before, for example. And then also, you know, these tokens can be used for collateralized decentralized finance lending. Yeah, the list goes on, but it's clear that the technology here is revolutionary. But what's so attractive really about stablecoins, as some of the other speakers put it as well, is that it takes the best elements from both Bitcoin and tokenized assets and then blends that with the easy to understand nature of traditional fiat currency. So this is one of the main reasons behind the mass adoption of stablecoins, because the use of these stablecoins requires significantly less understanding of the underlying technology compared to other cryptocurrencies like Bitcoin, perhaps. Right, so we can use like a car analogy for this. You know, all you really need to know about your car is that it will reliably get you from point A to point B. You don't need to know the inner workings of the engine or the transmission system in order to use it. You just have to know and trust that it works. So the same actually applies to stablecoins here. So what is a stablecoin? Well, it's a cryptocurrency that aims to peg its market value to a reference asset. So for example, a tokenized version of a currency in this case. So when stablecoins peg their market value to the US dollar, $1 stablecoin will equal 1 fiat US dollar. And as Mark rightly put it as well, the stablecoin is, or the stablecoin market rather, is enormous. And it's actually grown by over 5x in market capitulation over the last year and a half. And as it stands, there are 113 billion coins that have been issued to date, which is quite interesting compared to the 28 billion which were issued at the start of 2021. But so how are stablecoins actually useful? Well, like I said, first and foremost, they lower the barrier to entry, given their easy to understand nature. Then you have all the same benefits that we mentioned about Bitcoin on the previous slide, or on the first slide rather. Stablecoins are cheaper, safer, and faster than the payment methods available to businesses and individuals today. They enable the mobility of fiat-backed digital funds between different crypto environments without actually needing to interact with the traditional financial infrastructure. So rather than going through the hassle of, you know, paying fees and converting your crypto assets into a fiat currency, and then, you know, repeating that process for every trade, because that can take days depending on the bank you're using, this can now be done instantly. But they also aid in the process of price discovery, which is obviously vital for the efficient function of global markets. And stablecoins secure the value of gains of your digital assets. So, you know, say you wanted to sell some of your real estate tokens for a profit, you don't necessarily want to hold those profits in Bitcoin, because then your profits are subject to, you know, short-term value depreciation due to market volatility. So through stablecoins, you can actually hold that profit securely in a coin backed by the US dollar, for example. So the value of which will not rise and fall over time. And then lastly, stablecoins can connect the unbanked to the new financial system by allowing them to send and receive money digitally in an easy to understand fashion. So I think the use cases for stablecoins are quite clear in this case. Now, when we look at the stablecoin market, you can see it is an increasingly competitive landscape. And although its market share is dwindling, you can see in the graphs above that USDT, right, it's in the dark blue there, is by far the most used stablecoin in the entire crypto market. So also shown in the graph above, you can see that we have BUSD, which is Binance's native stablecoin. You have DAI, TUSD, or true US dollar. And perhaps the most important one is the second largest stablecoin on the market, USDC, which you can see is actually taking larger and larger portions of the stablecoin market share. So without going into too much detail, I would like to briefly touch on these top two stablecoins, USDT and USDC. So many of you have probably heard of the largest stablecoin before, USDT, even if those of you in the audience are quite new to the crypto world. And that's because USDT has attracted international attention due to concerns over their dollar reserves. So USDT is actually issued by a Hong Kong-based company called Tether. And despite Tether's then unproven reassurances, for years, people did question whether or not USDT was backed one-to-one by the US dollar, or US dollar in their reserves rather. So people wanted to make sure that for every one USDT that was issued, Tether had one traditional US dollar in their reserves. And as Tether was recently forced to disclose, this is not the case. So Tether released that up to 85% of their collateral is held in cash, cash equivalents, short-term deposits, and commercial paper. Now, the remaining 15% is in the form of secured loans, corporate bonds, funds, precious metals, and other tokens, for example. But when you take that 85% and you double click on it, you look at the graph to the right here, you see that over 57% of that is actually unspecified commercial paper, which is a form of corporate debt. So to make matters worse, Tether also declined to identify the borrowers of the loans and or the collateral that was backing them. So this worried people, and rightfully so. Especially when this was released, there was no mention of any independent review by an accounting firm, for example. So now we have USDC, right? And USDC is actually issued by a US-based company called Circle. They were founded in 2013, and they've raised over $770 million from big names such as Goldman Sachs, Bitmain, and Digital Currency Group, for example. And USDC has become significantly more popular in recent years because it positions itself to be the more regulated, more audited, and the more trustworthy stablecoin on the market, right? In a time where confidence in USDT or Tether is on the decline. So, I mean, unlike Tether, you can see here that Circle's blend of reserves is quite different, with a greater focus on cash and cash equivalents and a smaller share on commercial paper, right? Only 9%. And proponents of USDC view the stablecoin's larger allocation of cash and cash equivalents as an indication of Circle's capacity to support large-scale USDC redemptions in the event of a crisis. So really, it's their financial and operational transparency which allows them to really stand out in the stablecoin market. And they're also audited by Grant Thornton, which is worth noting here. And they release reports on their US dollar reserves every month, which is great. And it is arguably because of this that they've landed some of the largest partnerships in the industry, such as with Visa and Coinbase as well. Now, we know how assets can be tokenized now and all the benefits that go along with that technology. But say you've decided you would like to buy a piece of tokenized real estate through a company like DigiShares, for example, and you've decided that you will take the most straightforward route and buy this token with a safe and reliable stablecoin, like USDC, for example. You do still need a way to buy your USDC with traditional fiat currencies, like the US dollar, for example. And this is where regulation can typically pose a bit of a challenge, right? The cryptocurrency market, as I'm sure most of you are aware, is a widely unregulated market. But the one way in which authorities aim to regulate the space is actually to keep a stern eye on the entry and exit points of the crypto market. So what does this regulation entail? Well, it means that the identity of the individual entering or exiting the crypto market needs to be recorded for anti-money laundering, anti-terrorism financing, screening of politically exposed persons, or even for running sanctions checks, for example. So like in the EU, they enforce the AMLD5 regulation, the Anti-Money Laundering Directive 5. So this can be quite a lot to think about for the average Joe who's just looking to buy a few $100 or dollars worth of USDC. So what is the solution to this? Well, this is where Coinify comes in, thankfully. We do provide the most compliant access into the crypto market without compromising the ease of use from a user's perspective. We were established in 2014, right here in Copenhagen, Denmark, and users and businesses typically rely on us at Coinify for our compliance-first Fiat-to-crypto gateway, or on-off ramp, as Mark referred to it as. So this means that users can buy an array of cryptocurrencies with their Visa or MasterCard, debit and credit cards, as well as bank transfer, as well as Apple Pay. So, which again, are just about lowering the barrier to entry for the average person looking to participate in the space. This is something we've been doing for 7 years now, and over that time we have grown that user base to over 40 million, and we are fully compliant in 180 countries, which means that all AML and KYC regulations mentioned on the previous slide are fully adhered to, so the user really doesn't have to think about it. So how does it work? Well, number one, the user must select their desired fiat currency and their cryptocurrency of choice. And then following that, the payment methods are presented. The user then completes a one-time KYC, which we do with every single user that enters Coinify's services. But that just means that they have to select their country of residence, they take a quick selfie, and then a photo of their identity document as well. So from there, the whole KYC AI mechanism does the rest, which means that it actually only takes 2 minutes for each user to complete the KYC. So we really are just trying to make it as streamlined and quick, as easy as possible for every user. And then once you have officially bought USDC through Coinify, the USDC will be sent directly to your platform of choice. In this case, it might be your DigiShares account. So it really couldn't be easier than it is right now. Yeah, I hope I've provided some useful information here about the stablecoin market, as well as the technology and use cases behind it. If you'd like to learn more, about the specific use cases even for buying crypto with fiat as a business or individual, more than welcome to drop me an email at afb@coinify.com. And we can also do like a personalized Q&A there if you'd like as well. But thank you.
Yeah, I have gone through the Q&A, and I think there are several questions. I think most of them are better for the fireside chat, but there is one I believe is directly to you, and that is from DL. Is pegging a coin to fiat a transitionary solution? Will there be a necessity for a stable coin once mainstream cryptos become less volatile?
I would still argue yes. It's again, if you don't want to have to pull your funds out into traditional fiat currency, you do need to secure the dollar value of your gains. Yes, maybe Bitcoin will become more stable as it grows in market cap, but at the end of the day, you will have stable coins being the more likely go-to solution, just because they will be more stable. And then later on, when algorithmic stable coins become more and more popular, that value is really pegged to $1 exactly, without the need for collateral either. So I think that's more the direction we're going to go in, as opposed to just not using stable coins at all.
Okay, very nice. And then there is just a comment, and that is excellent.
Thank you very much, whoever that was.
Yes. That was it then. You are joining us in the Q&A in not so long. So see you there, and thank you very much for your presentation.
Thank you very much.
Yeah, bye-bye. Now we are ready for the next segment of today, which is the case studies. And we'll be starting off with Solo Makara, CEO of afrix.com. He will be doing the first case study on AfriX's Africa strategy and how tokenization and stablecoins will accelerate that strategy. Solo, are you there?
I'm here, Matt. How are you?
I'm good. And are you ready?
Yeah, I'm ready. Let's see. Does this work? Let's see.
You're trying to share your screen.
Yeah,
yes?
correct. Yeah.
It's not sharing now.
Let's do this. How's this?
Okay, it's sharing.
Is that good?
Great.
Yeah.
Yes.
All right. Great. Okay.
Okay, go ahead.
Folks, thank you so much. As Matt has described, what we'll be looking at is specifically, I think, a lot of the information that has been shared around tokenization, stable coins. What are we as AfriX looking to kind of bring, all that insight and reduce it into real world use cases in the African context, right? So maybe just as a start, let's give it a bit of an overview of who AfriX is. We set out to really look at, doing transformational projects that we believe kind of accelerate, the wins as far as what's possible, A, with blockchain, and B, with technologies like tokenization, like stablecoins on the African continent. And our view really out the gate was, unless we're kind of, pulling guys like Klaus close to us at DigiShares, guys like Ryan Zega at T0, and folks like that who have that knowledge and have really just kind of taken the lead in their specific areas of endeavor, we are going to get left behind as Africa in terms of, taking all of those technologies and then translating them into real use cases for the continent, right? So we understand and we live some of the unique challenges that I think Africa faces, but we also see them as really, really exciting opportunities. And so how do we marry the technology with the opportunities and the challenges that need to be overcome, all right? And I think the beautiful thing about COVID, if anybody can say something like that, is it has really given and forced change on everybody, and has accelerated the pace of change around how people go about their business, how people do work, how people transact, and all sorts of things. So, whatever was the traditional kind of resistance to change that was baked into any new technology or solution, I think that has kind of flown right out the window as folks have realized that we need new solutions to some of the challenges that we're facing. Okay, so from an opportunity standpoint, the African Continental Free Trade Agreement, I think, was signed earlier this year. And really all that agreement is speaking to is that for the first time in really the history of the African continent, the continent is really seeking to become one economic zone. To give you a stupid example, if I'm sitting right now in Johannesburg, it is more expensive for me to fly to West Africa than it is for me to fly to London or Paris or Germany. And so typically what would happen is you would fly from Johannesburg to Paris and then take an Air France flight from Paris back down into the continent to go to the Congo, as an example. And so all of that kind of flies out the window as you begin to really look at the continent as one economic zone, which, by the way, is actually the youngest population globally as we look at the next kind of 5 to 10, 15, 20 years. And from a sustainable development goal perspective, I think there's an annual shortfall from an investment perspective of $200 million US. And if we look at where that funding has traditionally come from, whether it's the World Bank, the United Nations, the IMF, whoever it is, the turnaround time around delivering that funding has been horribly slow, and so you never really make any meaningful inroads into those challenges. The infrastructure development backlog is big, has been massive, and is just getting bigger year on year. And really, COVID has just exacerbated that, where I think what we all saw globally and experienced is the shutting down of global supply chains. What that meant was, for the first time, it became apparent, or very real, that there's a lot of extractive kind of, I want to call it industry that happens in Africa, where stuff leaves the continent, goes overseas, gets beneficiated, and then gets pumped back into the continent at 20 times the price. And so the thinking really, I think, over this period has been Africa has to begin to look much more at a beneficiation. The problem with that is you can say it, but it also implies the development and building of new ecosystems around that beneficiation of whether it's a mineral, agricultural products, whatever it is, right? And I think, as I said, the realization, particularly coming out of COVID, you know, around a lot of the savings groups that myself and our team speak to, is, you know, Africans want to do more, and really in an environment that hasn't really been conducive. All you have to do is look at a country like Nigeria, where because of the currency situation there and how weak that currency is, folks have really become the largest and fastest adopters of Bitcoin almost globally, just purely because you know, Bitcoin is solving a very, very real pain point in the lives of many people in Nigeria. And then I think, as I said, there's a massive savings culture right across the continent. And what has tended to happen is folks have really kind of seen, I want to say, opportunities or investment into projects, into businesses, into whatever it is, as not a viable, you know, option. I'll give you an example. In South Africa currently, the existing legislation says that an individual cannot walk into a business and invest, you know, their 200 Rand, as an example, into a business. And yet they can do that. They can walk into a casino and gamble that away. So a lot of, I think, let's call them issues around some of the existing frameworks, legislation, and so on, will need to change as we move forward. And we're really trying to drive that conversation right across the continent. Okay. And so from a focus area perspective, if, you know, it's one thing to talk about, you know, there's this beautiful agreement that has been signed, but what does it mean? And really, you know, the agreement is going to need a borderless, transparent, immutable source of truth for the movement of goods and services, so that taxes and duties can be properly calculated and shared amongst nations. And so by the time a finished product lands in the port in Cape Town, and it makes its way up to the Democratic Republic of Congo, every single one of the countries that product passes through need to be able to collect whatever that duty that is due them is, but there needs to be an independent source of truth that nobody can fiddle with. And so obviously blockchain really meets that need very, very neatly. I think one of the questions asked in earlier was how does one transfer you know, a property? And again, these are just some of those use cases where in the South African context, we have, you know, where all the bonds are registered. And in an environment where you've got an immutable ledger, why do you need that bond registration portal? And these are just some of the things I think as we move forward, as folks begin to really trust the veracity of, you know, what an immutable ledger means, we're going to see some of those use cases become very, very real. Okay. And then, you know, there's often a conversation around, well, there's not enough money in the world to sort out whatever the challenges are. And I think we very quickly realized, our team, that there is sufficient capital, both within the continent and around the world, to meet whatever the development goal shortfall is, or the infrastructure development gap, whatever it is. There is sufficient capital. What is missing, though, is a frictionless, trustworthy way for investors to come in. You know, several of the speakers mentioned that on-ramp, the tracking becomes important, and then how do you then collect your return and off-ramp? And so when I'm sitting in Singapore, I'm sitting in California, I'm sitting wherever, how do I see an opportunity that is in Accra, Ghana, and I have the confidence that my $20, my €20, whatever it is, will make its way to that project, will do what it said it was intended for, and I'm going to see my return. And those are just some of the things that I think as our team, we focus every single day. Okay, and as I alluded to earlier, the creation of entire ecosystems is something that we really are working hard on. A lot of the pieces are very much focused on the extractive piece. So if we talk mining, the gold is mined and then it's sent somewhere else for refining. Talk agriculture, raw materials they're grown here, great weather, great, awesome land, awesome rainfall, and then it's shipped off to China or wherever else. Same too with healthcare. If you look at some of the base ingredients that make up a lot of these compounds, and so if you cut right across the board, what does it look like when we begin to build these ecosystems? I think if I bring you to an exciting area as an example right now, is the whole cannabis, global cannabis kind of industry. And if you look at what's happening there, everybody has kind of climbed in, certainly in the African context, into the growing and the extracting into the oil. But then beyond that, nobody's thinking too much about how do we move this product up and down, the supply chain. So what does logistics of a restricted product look like, and so on. And so the building out of these ecosystems becomes super, super important. Okay, and so from a solution standpoint, I think one of the gents mentioned how you really have multiple conversations with whether it's the regulator or folks in authority who you talk to them about, this is what blockchain is, this is what a wallet is, and so on, and you end up having multiple conversations. But we've begun introducing what blockchain is and what the potential use cases can be to resolve some of the challenges that many of the countries, the government departments, and so on are dealing with. And once that trust, I think, over time increases, and the trust really gets embedded around blockchain being an immutable record, then we will begin to be able to unlock, I think, a lot of traction. Okay. From an African perspective, it makes sense to think about a commodity-backed stablecoin. And everybody kind of has spoken about gold up until this point, but there's several other, I think, commodities that can stack up really, really well. And our team is looking at what does that look like from an AfriX stablecoin solution. And I think we'll be ready with that in Q1 or Q2 in 2022. Right now, our primary focus is in tokenization. And we are focused very much on the real estate, the cannabis, general agriculture, healthcare, trade finance, and the FMCG, as well as the mining space. And so we believe that tokenization and the conversations we're having around tokenization kind of lay the ground to then transition the conversation into a stable coin type conversation. And then finally, AfriX is we're negotiating with one of the nations on the continent around a bond issuance. Again, what does it look like when a country is looking to raise funding for a project, and now somebody sitting in the UK says, yeah, I'm good with my £5, and this looks like something I've always wanted to do. I'd like to give something back, or whatever the motivations are. And there's a nice, seamless, easy, frictionless way for that to happen. Okay. Finally, the game changer for us is, apart from everything else that we've spoken about, is we also have, I think, an intelligence issue where a lot of what gets done on the continent, you find there's a whole lot of eyes that are trying to sway, whether it's the direction of what nations want to move in, and purely because of, I think, the vast wealth, mineral and otherwise, that sits on the continent. And so one of the things that we really worked hard on was to say, how do we bring the blockchain technology, take the lead on that, but then also bring in data compression. And so we have invested in the business that this is what they do, lossless data compression, as well as military grade encryption, such that nobody can look into whatever infrastructure is being set up on the continent to execute these very same things that we're talking about. And so if we talk about blockchain, really one of the big wins and the thing that I think attracts a lot of people globally is the fact that it gives individuals the ability to be sovereign. And so by taking blockchain technology together with military grade encryption, we believe we really drive that mandate of Africa and African countries beginning to be truly sovereign in how they go about their business. That's me. Thank you so much. Appreciate the time.
All right. Thank you, Solo. We have a question for you. So I think we'll just take one more minute.
Okay.
What are the biggest challenges you foresee for the adoption of crypto in Africa? How is the general awareness and regulatory perspective about crypto in Africa? So 2 questions in one.
Perfect. I think the first part of that question is definitely the ease with which you can arrive at a counter and have whatever your local currency is and hand it over and get your Bitcoin. One of the things that I think we've really seen is the amount of gas fees that you know, folks are paying in countries like Nigeria and so on. And so I think the introduction of Lightning as a kind of a layer 2 really, I think will help with that adoption. But certainly from I want to call it a layer 1 perspective, gas fees has been a big issue, as well as call it a network of where one can buy the crypto.
Very good. And there is a follow-up. How are the big banks and incumbent financial players responding to the rise of crypto and DeFi in Africa?
So it's a beautiful question. I think like we've seen, whether it's in Europe or the US, you know, everybody is a hater until they release overnight that, hey, we are actually launching our own, you know, stable coin or whatever it is. And so the conversation has, they have been lukewarm, to say the least, but I think these are intelligent people. They can see where the world is moving, and they might appear lukewarm only so that while they develop their own solution. So I think they know that it's inevitable, and they are quietly making plans to make sure that, you know, their market position is not challenged as new technologies get released. Sorry, Matt, I think you're on mute.
Sorry, I said thank you very much. That was a great answer. Thank you. And we'll see you in a bit again in the Fireside, yes?
Perfect.
Great, thank you. Now, next on stage is Mark Robinson of YChain. Mark, are you there?
Morning or evening, wherever you guys are.
Yes.
How are we?
I'm very good. Solo, can we ask you to stop your screen share? No? Okay, we're back. And Mark, are you ready?
Ready to go. We're this is week 12 of lockdown here in Sydney, so the hair's a bit of a mess, but we're all good down here.
Well, your news are traveling all around the world about your very, very strict lockdowns.
It's crazy, but hey, we're getting plenty of work done, right?
That's good. That's good. Please take the stage.
Fantastic. Can everyone see our screen? Excellent. So, hey, wow, it's good to be sharing such an awesome event. Klaus, thanks for the intro, for the invite. We're, in comparison to the other guys, AfriX, man, wow, that's fantastic. Cannot wait to chat further with you on that. We've gone the other way. Like what we're doing here is with YChain is we are looking to tokenize assets, not just real estate, but other smaller funds. And our main business is actually in education. So I run the International Academy of Wealth. And when we're in this space and we've been educating people about how to build their portfolio, we've got well over 500 members worldwide. And one of our biggest actual membership bases of all places is in Mongolia. And, you know, when we were chatting to our Mongolian community, we were finding that getting money out of the country was really hard. You know, investing into quality projects and quality opportunities, the way that we teach things were all virtually impossible. And that wasn't just in Mongolia as well. So we've got another large community in Japan. And our Japanese community were used to having effectively decades of negative returns. So they've been educated exceptionally well by their government to accept that, you know, small returns are quite normal. And when we started to introduce things like staking and tokenization of assets and stuff, it really opened their eyes as to what could be done. But again, bringing the funds out of Japan is a very difficult task. And even the assets they got access to, say Kraken as an example, in a normal exchange, what we found was that the very limited pairs and what have you. So what we wanted to do with internally with the way that we do things is, because we're global, we wanted to create our own platform. And the reason why we wanted to do that is because most financial planners out there, like I'm an ex-financial planner, I've been in the financial industry for 32 years. I know exactly how the old system works, well, and doesn't in reality. So I'm really excited in this space, but my role here is more of an educator. So when we were looking for a solution, and we talk about, I mean, this is how we build our portfolios, guys, and I don't have time to really dig into how we do this. But believe it or not, those returns that we've got there are well and truly achievable. And so when we're educating people around this, and we're talking global here, what we found was there was this nice little niche in the world of either crowdfunding or raising capital. And here in Australia, you can actually raise money without a license. You up to 20 people in the fund and up to $2 million. And you can do that every couple of years. So what we looked at was, how can we duplicate that on a cost-effective basis? And that's where we started to do our whole investigation in this space. And we came across DigiShares. And I know that we're here as a case study. So you know, that's how we became. We did actually interview a number of their competitors, and we found that Klaus and Adam and the whole team have been an incredible resource to build our platform that we have with them, right? I love everything that they've done there. Unfortunately for Klaus and that, right, we got extremely busy, so we've had to delay the launch of YChain. It has been ready for about a month or so, so it's actually on our bad side of things, Klaus. But everything else on your side, mate, has been fantastic. But the niche that we found was, when we were looking to do it, was that when you've got smaller funds, you know, that they may not necessarily need a complete platform. They might only ever do one fund in their life, or one project, whether it's building a house or creating a automated trading system or whatever the case may be. So what we've decided is to actually go down that path of having our platform, which is built on DigiShares, is to be more of a small project administration platform. And chatting to the regulators and the lawyers, because we are not the ones raising the money, the actual project manager is, then we can actually have everything on YChain, and we can be almost like a marketplace for multiple properties and multiple projects in different types. And one of the other things that we thought of as we were developing this idea was our platform could also be like a little incubator for those that want to end up building bigger funds or go off and build their own crowdfunding platform as well. So that's what we're looking for, guys. It's a very private, members only. So what I mean by that is we're not actually going out there to the general public at this stage. We have enough members and enough people, savvy investors within our community that what's happening right now is our community is bringing the small projects and internally we are looking to fund them. But again, we need to stay within those compliance regimes. We are staying within jurisdictions that we know. So Australia, New Zealand, UK, parts of the EU. And again, when you look at as to, you know, and there'd be, I'm guessing there's a lot of people out there who's in this space, you know, the compliance side of things can be, you know, can eat up a ton of your profits. So, and the last thing you want to do is get offside on anyone on the regulatory body side of things. So that's why we've decided to be a much smaller platform. We're not going out there to try and raise billions of dollars. We're just chasing little wee projects where the project manager makes money, the investors make money, and YChain, we take a small administration fee as well. Also, like I said, staying within the regulations and the compliance of it all. And when, you know, being a licensed financial advisor for so long, I'm now no longer a licensed advisor here in Australia, guys. I gave up my license about 3 years ago now. And that was one of the best things that we did because it allowed us to get more involved in the cryptocurrency space, in the blockchain space. And it has been, you know, phenomenal ride over the last 5 years or so. So we want to make sure that when we were looking at a platform, we wanted to stay within the regulations. We want to stay compliant. And we love the fact that the DigiShare platform was, you know, incredibly useful in its own right. But I also love the fact that we can plug APIs in as well. And I'm looking forward to seeing how we can plug Momentum on it as well. I've already got their website up and running. We're already becoming a merchant on Coinify because we want to bring those, have the ability for our members to invest via crypto as well and get paid outside crypto. And the other part that I liked about the DigiShare platform is we didn't necessarily initially need to actually go and create our own token. We can keep the token within the platform. So we thought about it and we went, you know, right now, because we're not going out to the mainstream, we're keeping it very close within our own community. We didn't need the tokens and to get off our own platform. So I like the idea that we were able to do that as well. So in terms of the types of properties, so we're doing a lot of small, we're getting ready. We've already been doing these for a number of years, but we're now about to get them onto the platform over in the next couple of months and to fully launch this in Q1 next year. So what we mean by small property developments is just here in Australia, you can sort of buy a property down in Melbourne as an example and build 2 houses on the back of it. A lot of the time when you do smaller deals like that, they're averaging anything from sort of $150,000 to $300,000 of net profit. So when you look at those sort of numbers, not everybody can afford to do the construction of them or to get finance. So, but we only need $1 million to raise to do a small property development like that. And what happens is when it's done, we will then close that opportunity down, and then, you know, it comes off the platform. And if we were going to do another one, it would be a brand new one, brand new project manager, and so on and so on. Again, wanting to stay within our current regulations. At some stage, we may want to go a little bit bigger, and if we do, then we will have to go out and get a fund manager's license. And when you start going down that path, I don't know about the rest of the world, you're looking at it on average probably $200,000 to get your license, and then you've got the ongoing costs that go with it, and a lot more headaches. So that's why we've chosen this niche. Like I said, I really believe this is this nice little pocket where everyone's trying to chase the billions, but if you grab enough of these little millions, you're making some tidy win-win-wins scenarios for everybody. Got to make sure the project manager wins, got to make sure the investors and our members win, and then just a win for WideChain on the side there as well, which is fantastic. Now, one of the other things that we looked at was, there are other opportunities in the space that are making good quality cash flow. And if you've ever done any sort of trading bots at all, they're definitely not hands-off guys, set and forget sort of stuff. You should be monitoring them. And one of the things that we've found is we have a lot of high net worth members, and they want to invest in something like a cash flow strategy. So trading crypto or trading Ethereum or BNB, whatever the case may be. So that's another opportunity that we can put on the platform. So it's all fully managed, fully transparent as well. So we've got one of those up and running at the moment as well. And then just longer term strategies where there's a government scheme here in Australia called the NDIS, a National Disability Insurance Scheme. And long story short, you can get properties that are fully cash flow positive and earning anywhere from sort of 10, 12 to 14% return. And the rents are paid for by the government. Billions of dollars are getting spent in this space. And again, what we're finding is the properties are of value. It might cost you $1 million, but some of the lenders won't lend more than 70%. And in some cases, the valuations aren't stacking up because of the extra, because it's a disability home. There are a number of things that the valuers aren't taking into consideration, like the technology that goes into the property, security systems, when when the renter is going on their wheelchair, going towards the doors can automatically open, all that sort of stuff. So we are finding that some of the properties, if they don't value up, you've got to add a little bit more cash to it. So by having a opportunity like that on the blockchain, on WideChain, where we raise the full amount, then it doesn't ultimately matter about the funding side of things. And these ones here, we would potentially look at putting the structure in a company and then having the tokens own the shares within it as well. So hopefully that makes sense, guys. Like I said, it was just I'm loving what everything's doing, but we know our niche and we know where we're going to be. And in reality, this is, we are looking to just stay in that beautiful space between helping mum and dads and that low to middle high net worth individuals. So hopefully that was useful. That was a quick 15 minutes. All right, sorry, another last one, guys, mirror trading funds. So we have some good quality traders in the Forex space. One of them has been averaging over 10% per month, and he's been doing that for a very long time. Again, our people in Mongolia cannot get the minimum funds together to get access to things like that. So it's a platform like DigiShare has provided for WideChain that's going to allow us to do that. So hopefully that was useful, guys. Yeah, happy to take any questions and hang around for the fireside chat.
Hello. Yes, we do have one question for you, Mark. Are you interested in expanding into other regions? And then there is a comment for that. It is from Steve. They say, we intend to launch a similar concept on DigiShares, and maybe you can help us speed up our launch with DigiShares based on your experience.
Yeah, love to help you do it, guys. We definitely learned a ton of stuff putting all this together. Like I said, definitely we take the responsibility for not launching it 6 months ago when Klaus and the team had it ready. It would, in terms of expanding, it would depend on what your regulations are. Like I said, we've got this nice gray area in New Zealand and Australia. Some countries have it similar as well, where you can raise a certain amount of money before you need licensing on it. So as long as the region had similar regulations, there would be no reason why we couldn't go down that path and go to other regions. Yeah.
Okay. Yes. Thank you very much. It is now time for the fireside chat. So now everybody who is participating can answer your questions. Please try and keep them in the Q&A, and then we will go through them on the panel. So I would like to invite all speakers to come back on stage and turn on your web cameras. Hello, hello. All right. We are missing a few. Very nice. Klaus, are you with us also?
I wasn't sure I should be.
Yes, we
I'm
want you to. Okay, well, welcome everybody. This is a very casual chat, and we have some questions from the audience. If you feel like you have something to contribute with, you just physically raise your hand. I can see all of you, and then I'll give you the word, and that way we can try and avoid everybody speaking on top of each other. Yeah? So the first topic we'll go into is regarding USDT. And the question is, what if there is a liquidity crunch one day? They will not be able to peg 1-to-1, will they? So any comments here? Yes, Ani, please take the stage.
No, exactly. I mean, I think not all stable coins are, you know, what can I say, like as trustworthy as the other. I would say, especially in like Tether, you know, it's not pegged 1-to-1 to anything. It has a collateral that is kind of made of different things, even crypto. So if the underlying assets go away, then of course they will not be able to redeem anything. So that's why, like for us, we are an EMI, which is kind of the closest thing to a central bank as you can get. We are regulated. We need to have it pegged 1-to-1, whether it's the euro or dollar or sterling. So yeah, I think it's very important that, you know, when investors are using stablecoins or crypto, that they know, you know, what the underlying assets are, and kind of if, you know, can you trust the parties to actually safeguard your funds or not?
Okay. Anyone has something to contribute to that?
Sorry, man. Oh, Andrew, go ahead.
Yeah, Andrew first and then Solo.
Thank you very much. Yeah, I was just going to say, this is pretty much what I was chatting about before with USDC versus USDT. You know, you do want to make sure that you get as close as you can as 1-to-1 in terms of the reserves they have. I think Paxos even has up to 90% these days. But again, there's, you know, the liquidity is not as deep on their side as it is USDC, so it's a bit of give and take. But yeah, I think, you know, if you are going to participate in the stablecoin market, do your research and make sure you understand what you're getting into. And, you know, in the case that there is a sort of run on those markets, that they can actually back that up with what they have in their reserves.
Very nice. Solo, you want to contribute to that?
No, just a question really for Andrew and Arnie. I think, you know, it's one thing to peg a stable coin to a currency, but if coming out of COVID and all these central governments printing cash, right, to try and fight the COVID crisis, you know, so the inherent value of each dollar is weaker than it was, call it 3 years ago. How does that get mitigated as we move forward? So you've got an underlying currency that is pegged 1-to-1, but the currency itself is devaluing. How do you mitigate that?
I mean, it's like for us, for example, if we issue €1 million, we have it safeguarded in euro. So €1 is always €1, right? So even though the euro will get weaker or whatever, it will still you will still have the same asset backed, and you would always be able to redeem one-on-one, one-to-one. And we actually have more than one-to-one. We have 102% actually that we need to safeguard. Yeah.
Great.
Yes, thank you again.
Yeah, just to add on to it, I think, with sort of inflation playing a role in this, there's a few things you can do. And you do see people, if they are looking to hold their stablecoins for long term, they end up lending it out on sites like Nexo and maybe, Celsius, and they get a return on it, which might sort of hedge against that. But a lot of the time I see stablecoins being used for sort of day-to-day trading, not really long-term holding. If you are trying to hedge against that inflation, there's Bitcoin, there's like Paxos or Tether Gold, if that's, your cup of tea, but there's a few other options there available to you.
I'd like to add also that, for Monerium, we are all kind of crypto friendly. We were early into crypto. We think it's amazing, and the blockchain technology in whole, and other stable coins also. And I think it's like in the examples that I gave there, we have like a decentralized exchange like Uniswap, which makes it easier for everybody also to, okay, if you have the Monerium euro, you can go to the USDC, which is, I think, considerably better than USDT. But then you can kind of swap these kind of two with USDC and euro, and even better, if you have both, you can put those funds into a liquidity pool like Uniswap and earn interest there. And so I think what we're heading towards is not going to be one stable coin for all or money or whatever. It's going to be this kind of homogeneous system where you can trade and exchange everything instantly, and it's quite beautiful.
Yes, Mark?
And if I can just add to that, the beauty of crypto in general, I think, is that suddenly governments don't have a monopoly on issuing money to a large extent. But I think to answer your question, Solo, is these currencies, these stablecoins, are a medium of exchange, right? So a medium going from one thing to another. Of course, you can choose to hold stablecoins. I would encourage to deposit into something that generates yield, like Nexo and Celsius that you mentioned, Andrew. But again, it's a medium of exchange, moving to, for example, let's say, top of my head, real estate, let's say, with DigiShares. Yeah, so I think that's important to notice or underline when it comes to stablecoins.
Any further comments?
One more comment, just that, I think just to kind of also say, like, as long as we're paying taxes in euros or dollars, we will have fiat. That's basically, so there will always be a need to have a good on and off ramp. And that's what we're trying to have it as instant and as frictionless as possible without, more intermediaries.
Yeah. I think everybody agrees. Speaking on tax, there is a question. What are your thoughts on taxability on the trading of stable coins? Anyone here is a tax expert that wants to answer? No, people are shaking their heads. I think also.
I can
Yes,
give a comment on that. El Salvador just made Bitcoin legal tender, right? So
Yes.
If you ask me from a personal perspective, I think other governments should follow suit. That would solve the issue more or less permanently, because then you will be able to pay your taxes in crypto. But while that's not the case all over the world, I think you should just tax it just like any other sort of capital gains. In Denmark, in particular, we have a very, very weird taxation on crypto. It's a very defensive way of regulating, if you ask me. But yeah, I think the ultimate solution is to make it legal tender, like El Salvador.
very good.
I have
Yeah,
one comment there, because we are working with a lot of great partners like DigiShares, and we're also working with a company called Request, which is making invoices, like self-settling invoices. So Matt, if you owe me, €100 or whatever, I can send you an invoice and say, okay, this is my blockchain address, and the invoice itself can automatically settle the invoice. So there is no need for an extra payment system somewhere else, or Visa or whatever, to settle that. But the amazing thing also is that these invoices, because they're smart contracts, that you can pay in whatever you want to pay. Like you can pay in DAI or USDC or in crypto, and the invoice will automatically convert that to euros or whatever I want to get paid in, so I get paid in. And the other thing that you can kind of build on top of that is kind of, if you wanted to kind of pay taxes in real time or whatever, and when governments will be there in, I don't know, 10 or 20 years, we could also have like, paying taxes in crypto, whatever, completely automatically. And you can have any assets like real estate or crypto or money or whatever that get automatically converted into whatever currency the government will take, and you will pay your taxes in that. So I love this kind of, this robots will pay taxes soon from Sergey or whatever in the comments. I think that is actually what's going to be happening. Like there's robots who just paying your taxes in whatever assets you hold in your wallet.
Very nice. Any further comments on the taxing? No. Next question. There are several parts to this question. So first, who is creating the market space for tokenized real estate transactions, i.e. how is liquidity created and maintained? And part 2 of this question is, how, with fractionalized assets, are decision rights handled, especially with retail investors investing small amounts into real estate?
Yeah, maybe I should take that, because that's exactly what we are working on within realestate.exchange. So we intend to tap into or use existing liquidity pools, DEXs, AMMs. I don't think we can disclose right now, but tell me if I'm wrong, Klaus, who we are partnering with. But they are major DEX in Ethereum, so that gives you a handful of options. How is liquidity created? Some of these DEXs have really innovated on the whole issuance of tokens, doing fair launches and fair distributions. We can send articles on that, how they do that, but it's basically a curve where you start with a high token price on real estate, and then or any token, and then it moves down. The reason for doing that is so trading bots cannot front run and sort of bid against human traders, if you will. Obviously, security tokens in general, real estate in particular, is very different from regular tokens that are free floating, because you have an underlying asset with a certain price, let's say a book value, that the token price cannot go below that. Otherwise, you can buy up the building for cheap. There's a lot of regulation around this that I'm certainly not an expert on, but there are some properties with this that are a bit different that you have to take into account. Obviously, KYC and AML. If you want to buy real estate or securities, we have to know who you are. So it has to be a whitelisted wallet. So there are certain properties that makes it more challenging, but those are technical challenges that smart people are working on, and they will be solved soon enough.
Okay, very good. Does anyone yeah, Klaus?
Yeah, me. I just want to add also that we are working with T0 and other exchanges as well. So they can certainly provide liquidity, and we have an integration with more of these exchanges, especially T0, where we just announced the project today. We'll be closely integrated with them, and they can definitely, as a regulated exchange, they can provide liquidity as well.
Yeah. Okay. Then I think we're moving on to the next question. How does investors get the guarantee that the real estate token they hold is equivalent to the actual physical property or share of that property? What is the legal framework?
Maybe Klaus is the best one to answer.
I was thinking of him.
Yeah, maybe. So it's done differently from country to country, but generally what we do is that the token itself is linked to something like a share certificate. So what we typically tokenize is a share of the company that owns the property or the development project, and the token itself corresponds to a share then, or a collection of shares, and the token has the capability of having a link to a web page that basically corresponds to the share certificate. It is password protected, so only the investor can see it. So that's the link from the token to the legal side, you could say. And then also, I would say, when the legal unit is created that needs to be tokenized, it needs to be written into the bylaws that shares can be issued as tokens and so on. And that's sort of the basics, I would say. Then there's a good guarantee that the token itself will link to the share and to the property. And of course, the platform that we provide and other companies in the industry will maintain the share cap table and make sure that it's always 100% updated based on any transfer that is made with the token itself. So that's a short answer to that, but it is quite complicated, I would say, in many countries to ensure this.
Yes, very nice. Anyone has further comments for that? No? Okay, next one. What are your views on the future of stablecoins amid the growing central bank digital currencies? Yes, Andrew?
Yeah, I think I could answer that question over the course of an entire hour, but I think to keep it short and sweet, I think it'll play out in a couple of different ways. You see what China's response has been, banning Bitcoin for the third or fourth time, and arguably to remove any competition in the space for when they have their full CBDC launched. You might see some similar things happening in the space in the US or in Nordic countries where they're also in beta testing for this sort of thing. But then again, you might see the rise of algorithmic stablecoins, like I mentioned before, decentralized stablecoins coming to the space, where maybe more centralized ones won't be able to operate as freely as they are now. So I think it's quite an interesting question, especially considering the following question about the future of DeFi, and I think that all relates to KYC and AML regulation and sort of what they have to adhere to. But yeah, it's really hard to tell at the moment without any clarity from regulators.
Very nice. There is what I believe is a follow-up question to that, and that is, how do you envisage the future of DeFi after the launch of CBDCs? Andrew?
I think, yeah, sorry.
Oh, yeah, Arnie?
Yeah, okay. I think with CBDCs and everything, I think like with everything right now, everybody's kind of exploring and talking maybe what will happen, with CBDCs. Is it going to be, central banks will be will they be issuing the money? Will they be doing the consumer front of it? Like, will that happen? Will they actually be driving the technology and innovation? I don't really see that kind of happening. And we just need to see how everything plays out, and what they were saying also in regards to DeFi. Everything is in a little bit of a gray area right now, and I think regulators are taking it seriously now and just trying to figure out what these things are. Like when you have a decentralized exchange, who has the license and who's doing what, and is there any intermediaries there? And I think there are going to be new licenses, and they're going to try to retrofit something to old licenses, and it's going to be very interesting to see how it plays out. Especially with Monerium, we're working like I said with the regulators, and in regards to CBDC, we're having a close look on that also.
Okay, and then there is a question directly for you, Arnie, and that is USD or other fiat in the pipeline for Monerium?
Yeah. So we have actually issued dollars and pounds. So we are a relatively new company, and believe me, if you think blockchains are difficult and complex, wait until you see under the banking hood and see what's under there. So we really are focusing on Europe first and the euro, and really solving that problem, having that instant on and off ramp, and with a bank account in your own name that is directly connected to your wallet address. We'll see probably more currencies next year. We're of course focusing on dollars and pounds, and maybe even other currencies. We'll just need to see kind of where our partners are going and platforms and blockchains and kind of what's happening. And but right now we're focusing on the euro for the remainder of this year. But we have a license to issue dollars and pounds, and we also have a license that can be passported into other jurisdictions like the US or Asia or whatever.
Very nice, very nice. And then we have one final question for today, and that is directly to Solo. What do you foresee as the biggest obstacle in Africa adopting a stablecoin as opposed to individual African countries adopting their own?
Yeah, thank you for that question, Wade. I think the biggest obstacle, you know, certainly for me, is the departure point, right? So you know, what's the single point of truth or the universal truth that each one of these countries would kind of all agree on? And so I think for me, it really boils down to, you know, things like a commodity backed type, you know, stable coin probably brings us closer to a uniform coin that can be deployed across the continent, as opposed to, you know, one for South Africa and one for Botswana, as an example. And so that single point of truth that everybody agrees with is probably the biggest obstacle, purely because whatever their point of truth is informed by whatever their biases are and whatever agenda they're trying to push, right? So I think that becomes the challenge.
Very good and clear answer. Thank you very much for participating. For everybody who's joining us today, this recording will be out to you and sent to you, so you will be able to see it again. We will also try and collect the slides from those speakers who are willing to hand them over. We cannot guarantee anything, but we will try. And then we'll see you all again in a month. Thank you to all of our speakers. That was great. Thank you for joining. Bye-bye.
Thank you, guys. Okay, bye-bye.
Bye.
Guys.